In this video, I'm going to look at contested elections and future stock market returns. So as a current election, it's decided by such a slim margin, and I want to explore the implication of future stock market returns. So the basic question is, what is the implication of the thin vote margin on the next 4-year market returns? So for the full presidential term, is it going to be good or bad? So in another word, if you win by landslide versus you win by just a small margin. So apparently, if you have a landslide win, you might be able to push through your policies easier. And my hypothesis is the market is going to see good returns. And with the slim margins, vote margins, you probably can't, push through your agenda, or very easily, so that the market return probably won't be very good. So the data is from MIT Election Lab and Yahoo Finance, and we are going to calculate a vote margin as a percentage of the total vote. And market return, we use SP 500 to look. Here's a chart about since the 1976 election. That's our first coverage, and all the way through today. And we want to predict the next 4 years. And we want to plot these market returns against vote margins, see if we can we observe any patterns. And if we do observe some patterns, can we forecast the next 4 years market return? And here's a disclaimer. This is a fun exercise, not intended to guide your investment decisions, but I think it does shine some light. And I'm going to go through the entire process from the scratch, from the data acquisition all the way through analysis and discussions. So if you are interested, you can follow along, or you can just look at results what we find later. So let's get to this MIT Election Lab first. So here's electionlab.mit.edu data, and we just need to look at US president elections. That's what they have. So let's just click and download. So here's the data, and it comes in various formats. We just need to look at the tab format. We just download the CSV file. Then we can open it in Excel. So once we open this in Excel, something like this. So here immediately we can calculate the vote margins. There are a couple of things we need to find out. The first thing is look at here. It covers all states and all candidates, and the vote for each candidate, and total vote, etc. Okay, so what we really want to do is for each year, we want to aggregate the votes for Democratic Party and votes for Republican Party, and then look at the difference, and use that to divide by the total sum of the two candidates to get the vote margin. So let's get started. So just insert a new worksheet, and let's say year from 1976 to just add by 4, right? Add by 4, just add 4. So increase by 4 years. So each 4 years we have an election, and all the way through today, 2020. And we do want to find out the Democratic Party. So this is the party, Democrat. Okay, let's just copy these two because these two are in power for the last how many years, and other parties are minority and they have never been in charge. So we copy those two cells and we just transpose them here. And we can grab the votes and put those here. And for the 2020, they don't have the data. We can get it from Google. So let's first get the votes here. So we just need to look at the sum ifs because we have a vote for each state, for each candidate. We need to sum these votes, sum the candidate votes. And we always want to sum the same votes, vote column. So we make this absolute cell reference. And once we sum the vote, the criteria one is the year, this year should match our year, should match our year. And the party should also match the party. So the party should be absolute cell reference, absolute cell reference. And the year actually should be always that column, okay, always that column. And the party should match this first row, always first row, okay. So with this setup, and here's the formula if you are interested to follow along. So here's the formula. Okay, let's cut and maybe put here so that you have the whole formula here. And then we can just see it doesn't work out. So there's something wrong here. So the year column, you see, it's not absolute, not locked in. So we need to lock this column A. So we need to lock this. Okay, just function F4 lock this, and now we should be able to get the Republicans vote as well. So here we don't have. We'll get this data later, and we calculate our vote margin. The vote margin is I'll just define as the absolute difference between the two, and then divide by the sum. So as a percentage, okay, as a percentage. So we see that the vote margin is roughly %. Let's just do 2 digits. I think sufficient. And you could get away with just 1 digit. And see 2000, the election margin is really slim. So our hypothesis is under these slim margins like this low, are we going to see negative or low market returns? So let's do a market return. Okay. So basically, we want to calculate the 4-year SP500 return. So how do we calculate this SP500 return? Okay. And maybe let's put this here so you can see this. And SP500 return we have to get from Yahoo Finance. Let's get from Yahoo Finance here. So just click on SP500 and historical data, and click on the monthly price. Let's do, okay, and let's do a custom range from let's say January, maybe January 76 election. Let's do 77. Okay, let's do 77. Because the president won't be in charge until 77. Let's do the first day of the year and all the way through today. That will be fine. Okay, click OK. And we can apply. and we can download. Once we download the stock price for SP500, it's something like this. We can just move this. We don't need the whole thing. We just need the adjusted price, and the volume data we don't need either. So we can just essentially cut this and put it into our workbook. So we could just put it right here. Okay. So we have the stock market returns, and now we need to know the return for each 4 years. Let's just do a date, and SP500. Let's do a level. Okay. So this data, let's just do a date function, and a year, let's say +1. Let's start from January 1st. So it takes 3 inputs. So this gives us this year, and the next one, and the next one. Okay, so we can essentially do this. And let's look at the stock market returns. Okay, the stock market close price. We'll use a VLOOKUP. We'll VLOOKUP this date in this column. Okay, and once we find a match, we want to retrieve the second column, the stock price data. So second column. And here, because it involves, we are not there yet to the January 1st. Let's do approximate match. So let's make it a true. So I'll just use the current price at the end of this presidential term. So we verify this is a 102.03. This is correct. And we drag it downward. And 129.55, 1981. 129.55. So we just verify this data is okay. And now we can calculate the market return. The market return is nothing but the 4 year later price divided by the president elected that time price. And this is a 4 year return. Okay, 4 year return. And let's just move downward here. And we have the stock market return data now. So we could essentially do a chart. Let's just insert a scatter chart. So this is a 4 year SP500 return data, and the horizontal axis is the vote margins. Okay, and the vertical axis is the stock return. So let's label this. Okay, so let's label it SP500, or we just we could just say equal. So it will be here. That's our vertical name, and horizontal is just say equal vote margin. And we want to make all this black in color. So that's black. And what do we observe here? We see that for larger vote margins, that means you win the election by landslide. You see, it's mostly positive. It's pretty high stock market returns. Whereas when you get into the slim margin, when the election is contested, especially these contested areas, the stock return is not as good as the landslide winning elections. So from here, we can tentatively say that for the next 4 years, don't have high hopes. So of course we could do a correlation, or we could do a fit with a trend line, and we see that. So we can display equation here, and we could make this bigger so that you can see easily. So we see that it's pretty linear here, and it seems like the vote margin has a positive correlation with a 4-year stock return. And these are the 4 years. If you do annual, so suppose if we want to do annual, we could just divide by 4, right? So 6% is not too bad, but historically it's higher. In recent years, the recent three terms is pretty good. But if you look at that 2004, if you look at these margins, very low, and they happen to coincide with lower stock market returns. Now let's look at this year. We had a pretty contested election as well, and let's look at what we can say about the future stock market return. Let's get some vote information. Let's just do election 2020 votes. So here we have this votes. Just grab this. So we could just grab this, copy, Ctrl C, and we can just post it right here. Or just post it anywhere as a text, and we can grab this Ctrl X and put it here, Ctrl V, paste, okay, and Ctrl X and V, Ctrl V, and these are out, okay, and here you see it's not wide enough, right? So because it's a record turnout, we see a lot more, and plus this is a number separated by commas. Let's do that. So you see we have a record turnout this year, and the vote margin is not as great. It's pretty slim. It's not a landslide, not higher than 5% even. If you see, as long as over 5%, the returns are pretty good. And for the next 4 years, can we do something here? Can we maybe maybe forecast something like this based on the margin? So we could use this equation, for example, and you could use the slope and intercept equations in Excel. Why don't we do that, intercept? We are trying to use the vote margin as X to forecast stock returns. And then slope would be the slope of this. Okay. And the purpose of the video, or part of this, is to sharpen your Excel skills. And this known Y and known X. And multiply by the forecast, right? This vote margin as a predictor for the market returns. So this market return, if we change to a percentage, it's 32. It's going to be lower going forward, looks like. If you annualize, maybe 8%, not too bad for the next 4 years, but don't expect astronomical returns. If you want to customize, just do some cosmetics, we could fill this with, let's say, blue color, and we could do a different blue. Let's make it more blue here, and blue goes well with white. So let's do white. And here, let's do a marker. Let's do a built-in. Let's do a diamond. Let's do fill color as white. Oh, red. Red stands out. And let's remove the borders there. And what else? So we have this pretty decent chart, and we can just name this as election vote margins and the next 4-year SP 500 returns. Okay. And if you want to make this font a little bit bigger, you can make it bigger. And overall, we do find, let's make this marker a little bit bigger too. So let's click here, click on the markers. So we can make this markers a little bigger in size here. Let's make it a number 7. 7 is more scientific number. Okay, so now you can see it looks pretty good now. And I hope you enjoyed this exercise. And overall, let's just sum it up here. Copy. And let's just post it right here as a picture. And let's just make it bigger here and bigger here. A little smaller. So here's what we have. For contested elections, let's don't expect astronomical returns for the next 4 years. And hope you enjoy this video and just play with it. And if you want to sharpen your Excel skills, be sure to do so. And I'll see you in future videos. And I'll continue to cover elections, market returns, and fraud, and maybe the market fraud like Bitcoin manipulations and spam emails, including and other topics. If you have any topics of interest, please feel free to comment, and I'll be glad to work with you and produce future videos. Thank you so much. See you next time.